morning, traders. Welcome to the TMT stock market strategy video for Wednesday, December 7th. Oh, we had a little bit of a push up, a little bit of a push down yesterday. Nothing really to write home about. Markets did rallies, made new highs in the Russell and the Dow. Still working on a couple of indexes that have not followed suit. But there's a lot going on behind the scenes, and if you're not following it, you have to start following what's going on, meaning the market breadth, the internals of the market, what's going around in Europe. You have to put it all together, guys, because even if you're day trading, you still need to know what's going on, because we're at it right now, a high caution in the markets. And even though everybody feels great, you have to say to yourself, well, what is this market just going to continue to go higher and higher and higher? We've been doing this since 2009. Yeah, we are into a good time of the year. However, we do have a couple of weeks of weakness starting now up until about the 18th, when we have some tax selling, and then a little bit more at the end of the year. The last couple of days, the last 3 days of this month, we usually succumb to some tax selling as well. Last minute guys trying to get out T+3. So you have to just be careful here, okay? We've rallied immensely in the last 2 weeks prior to the election and post-election. So just keep a heads up here. High caution is warranted in this type of environment. Internals are not really reading what the price action is doing, so that means we have intermarket divergence, and we just need to be careful. That does not mean you can't buy the market. There are traders that just buy the market and don't even care. There are traders that are a little bit more selective when they want to buy when and where they want to buy the market, as far as where on the charts. And I tend to be that. I tend to be more of the more selective, high probability trader. To get in, if there's less risk, I'm getting in. If there's more risk, high risk, and if the market has already moved in the pre-market going into the opening, that's something that you want to just kind of wait and see if that's that type you want to get involved in. Okay. Anyway, we have the U.S. dollar. Okay. We held this 25.90, and even if we lost this, guys, we fill this gap. I think that's a healthy pullback. That it will still create a higher low from this previous low, and then the dollar should resume its uptrend. Okay. So we'll see what happens with that in the coming days. Next is going to be the GLD. GLD, which is a gold ETF. Gold sold off and held in there a little bit. It's up in the pre-market today. As you can see, it's very, very extended. That does not mean we look to buy it. I think we get one more flush back down into this zone here, 107, 108, and that's where I would start looking to buy GLD. Okay, and GDX, same thing. You can see here, and this is again off of our Premium Trader Premier service that we offer support resistance levels for you guys to see. Well, we rolled into support here. I'm going to look to buy it, or resistance, look to short it. Same thing. And even if you are playing it and we break through price here, that 2506 will go away. But you know that 2506 is going to be resistance, now support, and you look to buy that area for support. But come check it out at tradingmarkettechnicals.com. You can see here very highly reliable support and resistance areas for you to trade off of. Next is going to be the spiders, and I want to show you money flow. Okay, this is something that we at TMT have and use very frequently to see what kind of games a lot of these traders, or I should say, more money managers are playing, hedge fund managers are playing. And you can see here we rallied up, and now we rallied again for 2 days, and you can see that little price action bar here. Let me pull that out. You can see that. That we did not make new highs in the spiders, but we're right there now. And let's see what happens here. You could see the RSI is not as strong as it was in this previous high. Okay, so we do have a little lack of momentum pushing up higher. Okay, and that's probably because you can see the volume is diminished greatly. All right, now I want to show you the money flow. All right, so here you have your spiders. Okay, and here's you can see a lot of resistance that we broke out of, and now we're breaking out again. We do have some resistance up here at these levels, and you can see the stochastics starting to roll over, not as strong as it was in our previous rally. You can see that here. So we do have some divergence forming. Same thing with the CCI. Now let's take a look at money flow. This is really important here, guys. Money flow the last 14 days, okay, has diminished greatly from the last rally. I mean, literally has come right out of the spiders, okay? So this is not a good sign when you have money coming out of the market while price is moving higher. That tells me that all it is there's no money supporting, and all you have is the algos and traders just pushing this market up. And when you have no support with money, okay, backing it, what happens? Market starts to roll over again. So this is really important. This last 14 days, okay, of this rally, we have money coming out of the spiders. Very, very important for you to understand. Remember, you're day trading, I understand that, but you're still very important to understand what's happening here around you. Spiders 15-minute, again, just want to show you what we offer as far as our premium Pro Trader Premier video. We have patterns, levels, gap areas to be aware of. This is just a small little sample of what we use here, right? And here's a major support area. But again, these are all areas here that are valid for today's trade, and we offer this every single day, guys. All right, as a 15-minute SPY. As you can see, a big bearish rising wedge forming here as markets are moving higher. Next is going to be the 60-minute, and you can see we have RSI, not as strong as his previous rally here. So I just wanted to show you no real market divergence here in 60-minute. Transports looking really good. You can see that we're outside of the band. Now we're getting really overextended here, guys. We're at 78. Again, a little bit of volume, but not as much as the previous couple days in the transport. So looking constructive. It's just that the market needs a pullback. I mean, at one point in time, when do you want to put money to work? When the markets are up 10, 11% in 2 weeks, or when they're back down? You know, most money managers, investors, they never buy at the highs. They buy at the lows, and they sell at the highs. And that's what's happening, by the way. Inflows are coming in. That's retail. And outflows are going out, which are sellers of big institutions selling into these rallies. Okay, 38% retracement, still looking for that. Perfect, coincides nicely with this gap area of support. Okay, that also coincides nicely with this uptrend line. All right, so that's going to be the first pullback target of the IWM. Okay, and you can see here, clear example, same thing, guys. RSI not as strong as this previous rally here, so we're lacking momentum to the upside. Okay. And last is going to be the Qs. All right, you can see here, Qs really haven't done much. We did have a small little bear flag here, but money's definitely rotating out of the technology sector, and that's not a good sign for further strength going into 2017 unless it starts to pick up. Hope it helps, guys. Have a great day, and we will see you tomorrow. Be careful out there.